questions answered from our YouTube subscribers. So let's take a look at a few of these. First, what happens when a company buys a tax certificate and then a person other than the owner pays off the lien? Do they have the same rights as the successful bidder to acquire the deed after 2 years?
Exactly.
So when a company buys a tax certificate, so normally, at least when you're saying a company buys, so whoever buys a tax certificate, it's just the buyer, the investor, you could say. And so when they buy that lien, um, they may not know who exactly is paying off the taxes or paying off the lien. All they know is that the lien suddenly redeems. So their money, suddenly they get their initial investment back plus the interest that they earned or that accrued up to that point. Whether it's the property owner that's paying that off, or whether it was like a mortgage company that's paying that off, or whoever it is that may pay that off, it doesn't matter, because when it gets paid off, basically when the taxes get paid off is when when the lien redeems, and you don't have to worry about anybody else stepping in or somehow losing that right, because the lien gives you foreclosure rights if if somehow the redemption period expires and the lien hasn't redeemed yet. And so you're the only person that will have those foreclosure rights on the property. Only lien holders are going to have those foreclosure rights. And that's only if that redemption period expires. And so most of the time, though, you can just sit back and liens end up redeeming because people end up paying off their delinquent tax bills.
Yeah, exactly. So in this case, if anyone else would have paid it off, whether that be the mortgage company, whether that be a family member, they're not going to have any right. They're just essentially paying the taxes off. In fact, we've seen people or have heard of people that have just went online and they think that they're buying a lien, but they're actually just paying that person's property taxes. So it's only the lien holder that has that foreclosure right that, like Shay talked about. And so if you were to go pay off anyone's liens, or if then really you wouldn't have any right. It would just be that their taxes would be paid off.
Yeah, that is something that we've seen happen there in many cases. Okay, so the next question here, if you're looking to buy tax liens to acquire property, would it make sense to get the ones with a lot of existing unpaid tax liens, because it increases the chances of the owner not redeeming the lien and the investor getting the property? So there is some logic to that, at least in terms of signs and things that you can look for that will increase the chances, that the property will go to foreclosure. But additional tax liens are not necessarily, I mean, sometimes, so I guess I should back up. If we were looking at an over-the-counter list of properties and we were looking at stuff we might be able to foreclose on, then we might look and see how many tax liens are against that property. We might be able to spot properties that were eligible to be foreclosed on. And so in some ways, yeah, we could pick out properties maybe based on the number of liens they have. But in most cases, though, we're not really looking at that, or at least we're not necessarily interested also in the properties that have lots of liens against them. At least lots of liens are not the key, unless they're liens that are redeeming. Otherwise we're just talking about lots of roll-up. And there's some liens out there that have so much roll-up that they're upside down, meaning that there's more owed in roll-up than there is in the property value. And so those are the ones that we want to avoid because they're useless land.
Yeah, absolutely. Like Shay talked about, it's really going to be the roll-up that's going to be key. So we can look at those back taxes, but we're going to want to determine how much that the total back taxes are versus the property's value. So we may be looking at a tax lien. Let's say it's a $500 lien on a $10,000 lot. Well, let's say that there's 7 other liens, or we were looking at Colorado earlier in the training. They had 15 years worth of back taxes. Well, that 15 years worth of back taxes could be more than the actual property value. So that's an important thing to look at. It does give us an indication. And in the certain states that we'll focus on that, we'll look for that, and we'll know that, okay, there's, a few years there, we can go ahead and start the foreclosure process earlier. And that will increase our chances of acquiring property focusing on those liens. But we do need to be worried about the roll up like Shay talked about, because that could end up, costing us if we don't figure out what that total amount would be.
Next question here is, so when do you foreclose on a tax lien if there are 10 years of tax liens that haven't been paid and was bought at the over-the-counter? Do you wait for 3 years per Arizona law if they haven't paid taxes in 10 to 13 years? Okay, a little bit of confusion there. So when you buy a tax lien, you're going to foreclose when your redemption period expires if that lien hasn't redeemed yet. Okay, so in other words, if the lien has a 3-year redemption period and the lien hasn't redeemed and that 3-year period expires, then that's when you will initiate and start foreclosing on the property. Now, if you can foreclose on it, if there are 10 years of tax liens that haven't been paid on it, like you're saying here, then what would happen is when we went to go and foreclose, the county would say, great, here, you can foreclose, but here is the tax bill to foreclose. And it may be some humongous amount, we weren't planning on, and that's because it includes 10 years worth of delinquent taxes, with it. That's what we call huge roll up. That's what we most likely is going to be probably some kind of a toxic property, or at least has so much owed in taxes because of all of these unpaid tax liens that have existed against the property. So normally we foreclose as soon as we can when the redemption period's expired. And yeah, normally other liens are not an issue, or at least when we go to foreclose, you would have to pay those off in order to foreclose. So that's part of what we would call the roll up.
Yeah, well, and if you're looking at a taxing certificate, it's the redemption period is going to start on the day of the sale. So if we're looking at a tax lien that's 4 years old and the redemption period is 3 years, then yes, we could go ahead and buy that 4-year-old taxing certificate and start the redemption period in a lot shorter process than waiting out because it's already 4 years old. But like Shay talked about, if we're buying a tax lien that's 4 years old, and there could be 10 to 13 years worth of other tax liens, we've got to take those other tax liens into account, because if we're going to foreclose on the property, we're going to have to pay off that other 10 years worth of tax liens. And so that's where like Shay talked about, the roll up could totally, hurt a deal where you think you're buying a tax lien that could be a good tax lien because you're just judging it off of the price of the tax lien versus the total versus the property value. But if we're looking at that additional roll up, that's where it can suddenly become, a toxic type tax lien. And so, yes, you can start the foreclosure process in a lot of states if you're buying it already into the redemption period. But if there's additional tax liens on it, that's also a red flag that we're going to have to watch for.
All right, then last question here. How do I find tax liens that are already at the end of their redemption period in Florida when real auction holds most of the tax lien events? Okay, so there's a couple of problems here with the question, or at least a little bit of misunderstanding. First off, so Florida doesn't really have over-the-counter tax liens. At least they're not going to have inventory that is going to be stuff that you're going to want to go after and try to foreclose on, at least in a lot of these places. Now, they may have over-the-counter liens. In fact, sometimes you'll see some of these over-the-counter liens in some of the real auction uh, sales, but most of those are underwater, or it's junk land essentially. Now, also the real auction only covers some of the auctions in Florida, some of the lien auctions and some of the deed auctions, but definitely not the majority of either. And so there's additional sales that are happening out there that you can also find. But in Florida, though, you're never going to find liens that are like at the end of their redemption period or past the redemption period. At least you're not going to find those types of liens there in Florida, because everything gets bought up at the auction, or at these sales. And so the only thing that doesn't, are pieces of useless land, and you don't want to buy liens against useless land, because again, you don't want to acquire it. And so, yeah, I think you may be able to use, kind of going after over-the-counter opportunities in other states, but Florida, it's kind of hard to do that with their liens.
Well, they do have over the counters, but the problem is kind of like Shay talked about, is that the over the counters are going to be picked up fairly quickly after the auction. So there's certain things that you can do if they are not available online, then we may be able to check there. But usually they're going to sell very, very quickly after the sale because so many of the sales have moved online. So if you've already got an online auction, then you're not going to have just an on-site auction where you just have the local competition bidding on it. So that is going to reflect the type of inventory. So if we are looking at over-the-counters in Florida, we're going to get those within the first 2 weeks of the over-the-counter list coming up. We're also going to look at counties that aren't putting those lists available online to be able to just purchase off of Real Auction or purchase off of the Grant Street Group website. So there's really a small window of time where you can find over-the-counter liens. Otherwise, it's going to be like Shade said, it's mostly going to be junk property.
With some questions answered from our YouTube subscribers. So let's take